It's the last one for the month of July, but just before we let the month slip by, let's dissect happenings in the capital market during the week. So it's going to be another profitable 30 minutes here on Channels Television. You're welcome. I'm Ini John Mekwa. Let's begin with a review of the market. We start with Europe, where stocks fell on Friday after closing the previous session at an all-time high as investors reacted to another deluge of corporate earnings and economic data. The DAX declined 0.61%, the FTSE fell 0.65%, while the CAC dipped by 0.32% to close the week. Meanwhile, Eurozone inflation climbed to 2.2% in July, its highest rate since October 2018, and above the European Central Bank's 2% target. However, ECB policymakers have indicated that they expect temporary overshoots. And a week of volatile trading in Chinese markets has left Hong Kong Hang Seng Index 5% lower. Both Hong Kong and mainland listed stocks fell on Friday, losing the partial recovery they made after diving earlier this week. Hong Kong's Hang Seng Index ended Friday off session lows, but still closed about 1.4% lower at 25,961.03 points. Mainland listed stocks were also subdued as the Shanghai Composite declined 0.42% to 3,397.36, while the Shenzhen component was down 1.35% to close. Similarly, Japan's Nikkei 225 dipped 1.8% to close the week's trade. We move over to the United States now, where stocks fell on Friday amid a slide in Amazon shares, but the S&P 500 notched its sixth straight positive month. The broad equity benchmark fell 0.5%, dragged down by the consumer and energy sectors. The tech-heavy Nasdaq Composite slipped 0.7%, while the Dow Jones Industrial Average dipped 0.4%. Amazon sank nearly 7.6% after it reported its first quarterly revenue miss in 3 years. And in Nigeria, it's a similar picture. Sentiments turned bearish as profit-taking activities dominated market performance throughout the week. Specifically, the local bourse recorded losses in 3 of the 5 trading sessions. Profit-taking in Boa Cements, GT Holdings, GT Coal, and Zenith Bank drove the weekly loss as the all-share index shed 0.3% to close at 38,547.06 points. Accordingly, the month-to-date gain moderated to plus 1.7%, while the year-to-date loss increased to 4.3%. Activity levels were stronger than the prior week as trading volume and value rose significantly by 53.8% and 125.8% each week on week. Sectoral performance was mostly negative following declines in industrial goods, insurance and banking indexes, while oil and gas and consumer goods indexes recorded gains. The trio of Transnational Corporation of Nigeria, Oando and Fidelity Bank were the 3 top traded stocks for the week. Oando topped the list of stocks with the highest rise in share price, while Linkage Assurance led the losers chart. And we will talk more about that in just a minute. Let's go to some corporate earnings now. We saw a whole lot of that during this past week, and we will try to dissect it. But let's start with Dangote Cement. Dangote Cement has released its second quarter unaudited results for the period ended June the 30th, showing a positive performance. According to the earnings report sent to the Nigerian exchange, the company's revenue rose by 45% to 691 billion naira within the period, in contrast to 106.7 billion naira reported the same period last year. The cement giant's pre-tax profit surged by 75% to 281 billion naira, while its after-tax profit grew by 52% to 192 billion naira. Meanwhile, the company's net assets declined by 9.6% from 891 billion naira to 805 billion naira for the period under review. Similarly, Boa Cement has published its first half year 2021 result. According to the report, the cement company's revenue grew also by 23% to 124 billion naira from 101 billion naira recorded in the previous year. Profit before tax rose by about 27% to 50 billion naira, while profit after tax increased by 25% to 43 billion naira year on year. Another cement maker is Lafarge. Lafarge Africa says it's recorded a 29.40% increase in its revenue, which rose from 56.84 billion naira to 73.55 billion naira in the second quarter of 2021. According to the financial report, the industrial giant's net income increased by about 25.75% to 19.19 billion naira in the current period, up from 15.26 billion naira recorded in the corresponding period of 2020. Meanwhile, the company also declared a 25.75% growth in net profit in the second quarter of this year. Well, it's good that we have good news there to start the show with. We have now been joined by our guests for tonight. Mr. Rotimi Fakayejo is a stockbroker with the NGX. Good evening, Mr. Fakayejo. Thank you for joining us. It's good to see you in person. Normally, we just do a phone call with you during the week.
My pleasure, too.
Well, the month, I mean, today is the last day. Yesterday was the last trading day. How would you review the markets, the equities markets for the month of July?
It has its own pluses and also minuses. Maybe I'll start with the minuses. In the month of June, the market traded over a value of 100 billion naira, whereas in the month of July, the value traded is just about 42 billion naira. And that is quite a huge drop. And there was so much expectation and at the same time apprehension about what the financial reports could look like for the H1, that is half year.
Yeah.
And for what we've been seeing, I think the figures have been quite heartwarming for majority of the reports that we have seen. And I believe strongly that for the rest of them that are still remaining, which we may be coming as audited, I think they won't actually let the market down as well. So I think it's been a mixed reaction for the month of July.
For the month of July. How much of this mixed reaction was influenced by inflation? We saw inflation tapering, you know, the month before and then this month.
Well, the inflation figures remains an issue because I remember somebody that came on here and also has talked so much about that. That is, how can you justify the figures coming from MBS and the figures that we are actually seeing in the marketplace? So that conflict remains there, and it gives a lot of people apprehension about whether we should believe what the MBS dishes to the entire economy and to the entire world concerning Nigeria. So, but for inflation figures, it has its own part to play. All we can see from the figure of 100 billion to 40 billion naira value traded June compared to that of July goes to show us that the purchasing power of Nigerians have reduced, and secondly, the saving strength has also reduced, which affects investment. So that is exactly what has played out in the month of July. But the confidence in the market still remains. But it's just the strength to actually invest that is not there just as it used to be.
Now, when you say confidence, I believe that's local because we also saw the foreign investors' confidence, you know, down, waning.
Well, I think that has been around for maybe in the last 1.5 years, before COVID started, and then up to now. I think the average participation of foreign portfolio investors in the market right now, up to the month of June, was 21%. And that is quite ridiculous, but it's also expected because with the way the Nigerian economy had been, so much uncertainty about foreign exchange, inability to get foreign exchange, and also the future value of Naira is also a great concern to everyone. So the foreign portfolio investors will rather stay and watch how things happen rather than coming here. And for more of these transactions that we see representing participation by foreign portfolio investors, they are reinvestment. That is, they sell off part of what they have and also take new positions. So it's not as if we are actually getting a new inflow into the foreign portfolio investment. So that also is a really, really great concern to every one of us. The market is becoming to live with it right now. And I think if the local investors are doing about 78% relative to foreign portfolio investors doing about 21%, I think we need to grow more locally so that if and when they return to in the normal speed of investment in Nigeria, we will have been able to stabilize that, and the kind of fluctuation and volatility we've been seeing in the past will definitely be brought to it.
Because I wanted to say, what is the country losing when we have, I mean, obviously we should be happy to have more domestic investors, but when we remember that we need, you know, the foreign exchange, and we know these are the guys who should bring the foreign exchange, and we need that space to be occupied, and these are part of what the country is losing at this time.
I think we've actually lost it in the past. Our focus should be more on foreign direct investment rather than foreign portfolio investment. Because when it is foreign direct investment, the investment stays for over a long period of time. But when we have foreign portfolio investment, it's like hot money. It can come in this month, and in the next 3 months or 4 months, if there is good appreciation or if there is trouble within the system, they come back and take their money away. But if you have invested your money in infrastructures, building industries, and all that which is a result of foreign direct investment, then we won't have such. So we should rather look forward, create an ambience whereby foreign direct investment will come, and also we grow our own local investments in the
so we shouldn't be too worried about the portfolio investment.
I don't think we should be too worried.
Okay.
It shouldn't be a great concern at all.
So what do you think about this decision by the CBN on the BDCs? What impacts do you think it will have in that space?
Well, we know so much. We've been around in Nigeria now for quite a while. And this kind of swift policy change, one thing that first came to me is, can it sustain the test of time? We've had CBN coming up and saying they are putting a ban on activities of BDC, that is direct sale of forex from CBN to them, to Bureau de Change. But after a while, what do we see? Maybe 6 months, 9 months down the line, we see a reversal of that policy. So these ones, nobody actually believes it until we see it happening, and maybe lasting 2 years, 3 years, then that is where we actually know that.
But they've already started. I mean, but it doesn't mean, I think we also have to emphasize that it does not mean that the BDCs are no longer in operation.
No, they are in
only
operation.
Means that they are not getting direct supply from the CBN.
But that has always been their major source. And for me, pressures, I believe, are already on the CBN governor right now to do a reverse of that policy. And
that'll be too soon.
I don't see how he will not yield to that pressure with time.
Yeah, because we've seen this before.
Exactly.
Anyway, so we also have our earnings from the big guys in cement makers, and all of them have increased. We complain of liquidity in circulation, and we are seeing increase in revenue, increase in profits, increase. How do we explain that? The money is there.
Well, I think for the cement industry, yes, volume consumption may remain the same or may have reduced, but we have seen an increase in prices.
Okay.
And then knowing fully well that most of their raw materials are sourced locally. So invariably what that implies is that with increasing price, definitely they will churn out more profit. You
know, this month we had a lot of talks about oligopoly in the cement industry, the prices, some games going on. How much of that affects investors?
Well, what's trickled out to investors is how much the profit they make at the end of the day. And I think we are seeing the profits already. So
all that doesn't really matter?
It doesn't really matter to investors.
Okay.
It's affecting the customers or the products that they produce.
Wow.
So, but it's good for the investors.
Not fair, but I mean, that's just the way it is.
That is the way it is.
All right, so let's go to another sector now. We have Nestle Nigeria Plc, which also reported its second quarter 2021 earnings, revealing a 19.07% growth in revenue to 84.18 billion naira from 70.7 billion naira recorded in the second quarter of 2020. However, the consumer goods company reported a profit after tax of 9.33 billion naira, showing a decline in its profit after tax of 12.23% from 10.63 billion naira in the corresponding quarter of 2020. Compared to the previous quarter, its net profit declined by 3.07 billion naira. Mr. Fakayejo, what happened to Nestle?
Well, I think for them, we've looking deeper into the figures, we can see that it's not to do with how much sale volume they made. But I think what they just need is more financial engineering so as for them to be able to boost their profit. And I believe that may happen as we go deeper into the year. So we may not really see this kind of much decline by the time they are bringing in their auditor report for the year 2021.
Okay.
So there might just be an improvement.
All right. Okay, we hope to see that improvement, at least for the sake of the investors.
Abi.
Okay, moving on now. Nigeria-based Okomu Oil has also reported a 115.51% jump in its profit to 4.26 billion naira from 1.97 billion naira in the second quarter of 2020. This was contained in its earnings financial statement for the second quarter of 2021. The oil palm company's interim report shows that turnover for the second quarter rose to 11.07 billion naira from 6.54 billion naira recorded in 2020. Earnings per share also rose from 2 naira 7 kobo in 2020 to 4 naira 47 kobo in 2021. Let's quickly take that of Flour Mills, which has published its unaudited financial statements for the second quarter of the year. Revenue for the year rose 149.91 billion naira in the second quarter of this year from 98.7 billion naira in the second quarter of last year. The Consumer Goods Company profit after tax was at 3.33 billion naira in the second quarter of 2021 from 3.13 billion naira recorded in the corresponding quarter last year. Our profit after tax increased to 2.5 billion naira from 2.41 billion naira year on year. So these things are not just figures, Mr. Fakayejo. These are actually things that make a difference to people's life and people's portfolio and people's investment.
Yes, I think maybe taking one after the other. Okomu Oil. Companies that do not really have foreign exchange dependence, I think they are doing very well. We know that everything that Okomu Oil needs, Presco, is locally produced. Or they plant the plantation. I mean, they have the plantation, the oil palm plantation, and they reap the profit. And also for the ban that CBN has placed on finished oil palm products from being imported to the country. So it's a very good time for them. We are seeing the prices jumping up day after day. It's very much unstable. If you go to market today, it's a difference you see next week. So they are having it very good in that direction. And I think it's going to be better for investors.
Is it a good time for investors? Or, I mean, because they normally say buy the dip.
Yeah, I don't think we may see the dip for Okomu Oil and Presco. So if anybody wants to buy, I think you should just go ahead and do the investment. But for Flour Mill, we always have a major concern concerning Flour Mill. How can you justify a turnover of 149 billion and a profit of 2.9 billion? That particular company has been a major source of worry to the market. But we only hope that maybe if a time comes, whereby it's not just about submission of reports, that the regulators will actually look at what is actually happening in those figures. Then I think we may begin to see a turnaround. But for now, Flour Mills is always a major disappointment to investors.
Yeah. Well, let's take some more corporate earnings now. We have EcoBank Transnational Incorporated, which has released, of course, its financial statement for the first half of the year. According to the earnings results sent to the Nigerian Exchange Company, the Pan-African financial institution recorded 7% growth in its net revenue against the previous year, which climbed to $825 million. At the same time, the parent company of EcoBank posted a 23% increase in pre-tax profits year on year, about 20% increase in after-tax profits, while its earnings per share was at 19% within the period. Let's move over to Fbn Holdings now for its result for the period ended the 30th of June. Key highlights of the report show that interest income declined by 22.4% to 161 billion naira from 207 billion naira in the previous quarter. Profit before tax for the period increased by 9% to 45 billion naira, while profit after tax declined by 23% to 38 billion naira. Meanwhile, net assets grew by 0.9% from 765 billion naira to 772 billion naira in the second quarter. Well, before we move to another sector now, let's hear Mr. Fakai just comment about the banks. The financial institutions have been doing well. Well, granted, I mean.
Yes. Their mode of operation and the figures they release is as if they're not operating in Nigeria. While others are weeping, I think they are always smiling.
Why? What's behind that? Because people will always go to them because why?
Well, they are offering services. And and technology has really helped them so much. So they are having reduced costs vis-a-vis the kind of volume of transaction that they do these days. So, and whichever way you want to go about it, they will always take their charges. So if you make a withdrawal from ATM more than 4 times or 3 times in a month, then definitely they will get
if you do USSD,
whichever way direction
you go to.
It will continue to remain good for them. And
okay, good for them. But what about the conversation around financial inclusion? When you talk of technology in the financial space.
Well, they are trying in that space, and I think they can really do more than what we have seen. So I think it's just up to them to deploy more technology. We have seen it happening, but they will get there if we give them enough time, because it's more, if they put in more seriousness as they have been doing over the years, and I think it's going to get better.
And it's actually more profit for them and investors in their...
Because what ordinarily you may have to go out of your room to do before, you just have to be in the comfort of your room now and transfer money to wherever. Unlike in time past, whereby you have to go and queue at the bank. So I think...
or wait for a Monday to Friday when you know banks will be in operation.
Exactly. So it's all good for them, and I think it's definitely going to be much better as time goes on.
Okay. All right. So moving on to MTN Nigeria now. Its half-year 2021 unaudited financial results shows that revenue for the period rose by 24% year-on-year to 791.26 billion naira from 638.07 billion naira recorded last year. The company's earnings before interest, tax, depreciation, and amortization grew by 27.6% to 417.2 billion naira, while its profit after tax also rose significantly by 49.5% year-on-year to settle at 141.83 billion naira in June. Meanwhile, an interim dividend of 4 naira 55 kobo per share has been approved by the board. Also, Airtel's unaudited financial results for the second quarter of 2021 shows the total revenue was $1.11 billion, representing a 30.7% increase year-on-year from $820 million in the second quarter of last year. The company's profit after tax rose by 148.7% to $142 million year-on-year from $57 million in June. I think this is another sector that is also enjoying the time because what do they have to lose? You still have to go and do your mobile. You still have to communicate. In fact, more avenue for you to communicate now when we are trying to stay away from each other because of COVID.
Exactly. I think the performance of the ICT, that is MTN, Airtel, is really, really outstanding because we are comparing with a period of lockdown last year, whereby everything that you had to do had to be online, whereby movement was restricted and all of that. And if they can still bring out this kind of outstanding performance relative to that period whereby everybody depended solely on telecoms, then I think they are really, really doing well. And I think MTN has equally done better by at least letting investors to share part of what they have made in the interim, giving them an interim dividend of 455 kobo. I think is really, really, really good.
I think a lot of companies are embracing that now.
Yes.
Yeah, that's what.
So, and we're going to definitely see that in the coming week transcend into how investors will appreciate their share prices.
But you know, I was talking about the ICT sector. I was surprised when investment announcement came. I thought the ICT would be top there, but I mean, they had gone down to about 4%. And one would have thought that, you know, they would have attracted a lot of investment, seeing that there are more activities in the ICT. Well,
I think trading volume in that particular sector has been ridiculously low. We only have it good for MTN. Airtel shares are grossly illiquid. So, but for MTN, at least, if you have to buy, if you want to buy, you can still get to buy. If you want to sell, you can still get to sell. But it's not the same for Airtel. I believe maybe with this kind of result, investors will choose to trade better in the company. All
right, just before we let you go, what's your outlook for August as we begin on Monday, a new trading month and week?
Well, I think there was so much anticipation concerning July, and we have seen it transcend into positive ending for the month. I think for August, we may really not have it as it were, but I think it's still going to be positive as well. Because ordinarily what will have made us to have a lot of apprehension is the foreign portfolio investors. Normally, July, August, they go on vacation.
Yeah.
But we are not having them around here.
So it's just
going to be local. So I think it's going to be much better. Investors are going to position themselves better for the time to come. And I think it's just going to be good.
All right, thank you so much, Mr. Rotimi Fakayejo, stockbroker with NGX, for sharing your Saturday with us and sharing your thoughts with us on the performance of the market for the month. That's where we'd say thank you so much for joining us on this episode of Capital Markets on Channels Television. I hope it's been a profitable one for you. It's been a profitable one for us. Enjoy the rest of your weekend. I'm Ili John Mekwa.